before it was okay. Well, you would move to a different state for work, right? And we have a headquarters here, so that's where you're going to be working. So pack your bags and come on over. But this past year, everyone was sent home, and now companies are starting to reconsider. Okay, well, could we actually make this work where our employees don't come into the office? They actually call in, like with Zoom, like kind of what we're doing right now. And I think a lot of companies are finding that that's actually possible, not only possible, but it's also advantageous for them. Maybe they could save money on not having to upkeep their own headquarters or such. So we'll have to see how that evolves. If more and more people decide to live, outside big cities and just random cities, basically, and they don't have to move per se anymore to the company's headquarters. Mm-hmm. I know a lot of companies are already starting to do that, right? They say, all right, if you want to work remote full time, be our guest. Just like let us know that you're doing that. Yeah. If our company is headquartered in San Francisco and you have a place out in Ohio and you just prefer living in Ohio, that's definitely okay. You can work remote full time.
Mm-hmm. Yeah, but I'm just thinking from creative perspective, right? So I'm thinking, okay, if you are a coder or if you are, I don't know, an accountant, maybe there is a pattern of work there. You would understand like, okay, this is what I'm supposed to do. But there are certain things that requires people to be physically next to you, right? So you want people's feedback instantly, and as you are going through the creative process, I guess in those sort of work, maybe it's not that ideal, right? So just to give you an example, it could be a different industry. Maybe you're flying a rocket, right? So you cannot fly a rocket from your room, right? So maybe you need a little bit of more collaboration than going through the Zoom and maybe, that's my opinion. Sometimes, yes, for certain work, which is a manual work, it's okay to just do estimations or, do some kind of presentation, on your desk, on your laptop, which is quite easy, but for certain work, indeed, it requires a little bit more than that. And for the work, I hear feedback from the entrepreneurs that they struggle with those kind of situations, where you want to have a direct feedback instantly. Those kind of work, I think, would suffer. Do you think it's differently?
Yeah, no, I agree with you. Obviously, we're starting to see the trend towards remote work. Mm-hmm. It's mostly big tech companies that are trending that way. I mean, if you have like say Walmart and you need store employees within the store to actually do the work, then obviously you're going to need to have those employees come in every single day to the office or the retail store. So again, we're starting to see a lot of those companies that are more tech related, such as Twitter or Google or Apple. They're allowing for more remote work because the work that they do is more just like logical. They think of ideas, and then again, you can always migrate. You can transport your thoughts through, say, Zoom, and that's good enough. Now, as to like the creative aspect, well, I think that's different for everybody, right? There's some people who are more creative when they have humans physically in the same environment as them. I'm one of those people as well, right? I like having people in the same room together, bouncing ideas off of each other. Now you can do that in a virtual room, but for most people, again, that's not very comfortable. And I think maybe towards the older generation too, like they haven't done that through their entire life. So it's very foreign to them. And they prefer to say bounce ideas off of each other in a room. But I think, again, the younger generation who's starting to be more, engineers and we're going to work in tech companies, they're okay with that remote work. And I think that trend will continue in years to come.
I hear from feedback from a lot of entrepreneurs, and they say, mixed of things, right? So one of the things that you said is about the trend, but at the same time, I also feel like, if you are, doing some complex operations where you definitely need some kind of feedback, or you are coding, which is I don't know, which is very complicated, and you want a person next to you, which is about flying a rocket, then maybe you want someone next to you like who's really putting attention on your code, so that
Yeah.
so that you don't go wrong, right? Even though you are
Mhm.
smart and you are able to do everything on your own, but you still need someone to bounce ideas, right? So yeah,
Yeah,
so
and that's definitely that's a complication, right? I've heard that, especially with new hires. Well, if you were to go into the office, right, like pre-COVID, then you could more easily, let's say, move up the ladder, the corporate ladder, right? Because you would be interacting with superiors every single day. You would pass each other by in the hallway. You could just quickly go over to their desk and ask them a question. But with Zoom and virtual, like, you can't really do that in the same way. I
yeah.
suppose you could just set up quick 5-minute calls with somebody, but it's the normal for that. The normal standard meeting is like a 30-minute long meeting or an
Mhm.
hour long meeting, not like a 10-second interaction. So the dynamic is definitely a lot different. It's just, how comfortable are you with that dynamic?
I think on a flip side, I've heard that maybe people are getting more lazy now because you don't want to go anywhere. They just want to stay home and be cozy and just then show up in the meeting just on your trousers, and maybe that's what people are getting used to now, and once people get used to it, you don't want to change. Maybe the people are finding different reasons to say, hey, we don't want to come to office because I don't prefer to work in office, right? So maybe
Right.
that's a different way to look at it, right?
Yeah, I mean, there's that social dilemma, that moral problem right there, right? I mean, if nobody's watching you, right, do you do what you're supposed to do, or do you do what you like want to do?
Yeah,
And for most people, that urge is too strong, right? So they wake up at, say, 11 o'clock, for the first morning meeting,
yeah.
and then they get on. But if they were to go into the office, say, uh, everybody can see them present. Like, they might not be in a meeting, but they can see them, so that they come in at like 8 o'clock. So that is a problem, I would say. So we're gonna have to see how people adapt. I think if you get your work done at the end of the day, though, I think you're doing your job. So
Yeah, yeah. Indeed. Yeah, and this is about how the world is operating right now. And how about you? Like, what are you doing, and what's keeping you busy?
yeah, so I am right now. I am the CEO. I was the CEO and co-founder, or just founder actually, of Ayrro. So Ayrro is an application. It's a startup that I developed, or started about a year and a half ago now, that lets users create their own stock and cryptocurrency trading algorithms,
Hmm.
and completely without code. And then they can deploy those to the cloud and have those run 24/7 automatically on their behalf. So it's basically a way to trade stocks without them ever having to actually be present on their phone or on their desktop placing orders.
It's interesting what you just said, because I am I'm also, let's say, not an investor, as in, a profound investor, but let's say a low-key investor, small investment,
Yeah.
Let's say I try out, right? I try out the crypto market, and I also listen to people, who are much better in terms of investment ideas and so forth. And I listen to them and I'm like, okay, Ethereum is going up. Let's put some money there, right? Okay, there's another currency called Shiba Inu. Like, oh, this is interesting. So I just follow those news and I just go for it. But I'm not, let's say, a very strategic investors. So people like me, like, who struggle, often, in terms of going to the trading part, we just I'm more of a stable sort of investor. I put some money, and then I'm like, I check back after 6 months, and I'm like, okay, this is a good time to sell it off. That's it, right? Boom.
All
So I
right.
don't make a lot of money in that regard. So how does someone like me benefit from your app?
Yeah. So I recognize that there are a lot of people out there who aren't professional traders, right? They
Yeah.
don't know all of the ins and outs or the different technical indicators, say, when to buy and when to sell. For those people, well, we either could practice, right? If you're interested in learning, then we offer what's called paper trading. Now, paper trading is an industry standard term for basically trading with fake money. So if you're motivated and you're like, actually, I do want to increase my skill level, get better at trading, then we give you some fake money. Really, it's just virtual money, and you can play around with creating your own algorithms, and then see how that would have performed with your fake money, right? Now there's that subgroup of people, but then there's also the people who are just like, all right, I don't know what I'm doing and I don't really want to learn. I just want to make money, right?
Absolutely. Right. I don't want to know the ins and out. I just want every morning when I wake up, the money should be at least double, in the morning. Right. So that's what I want to do. Like, if that's a possibility as such.
Yeah, absolutely. So, we do recognize that there are those people as well. It's, totally fine with that too. So we provided a feature on our app called Auto Shadow. Now, Auto Shadow is, our app is kind of like a social finance platform in that when you create a user account, if you decide to make your own algorithm and start profiting, then your profits get shown on a leaderboard. Now, other user accounts say, like, for yourself, like if you don't want to make your own algorithm, then what you can do is you can go on the leaderboard and see some of the top traders. And then what you can do is you can auto shadow them. Now, auto shadowing is basically just, I want to follow whatever this person is doing. I don't really care what they're doing, but I'm just going to follow the same trades, automatically execute the same trades that they are. And in that sense, you make the same profits as they do without having really to know what you're doing.
So if they fail, I also fail badly.
Yeah. I mean, that's one of the risks, right? I mean, if we had a golden button for just make me money no matter what, then we'd all be millionaires, but or billionaires. But so there is some risk, but we're trying to mitigate some of that risk by saying, all right, well, these people have a proven track record. Like, these people have profited for the past 6 months in a row. There's a good chance that they'll also profit the next month, right? Just based on their history. So we allow them to be auto shadowed, and there is like a little kickback. There's an advantage for people to put their own algorithm on the leaderboard, right? Because obviously, if you're putting your algorithm, or if it's a really good algorithm, usually that gives you some incentive not to share with other people, right? I mean, if you found the secret sauce, then you don't want people, crowding out your efforts. So we do offer some kickback and say, if you decide to put your algorithm on our leaderboard, we'll revenue share with you based on how many people follow your algorithm.
And how do you make money in there then? Is it on the win, or is it on the trading itself, or like how?
Yeah, well, there's a lot of different ways you could make money with a business structure like this. We have bounced ideas off in the early stages. Like, one of our ideas was, well, we're not going to charge you at all if you use our product and you lose money, right? We're not going to charge you, but if you do make money, then we'll just charge you like a percentage of your monthly gains, say. We'll charge you like 5 to 10% and cap that at maybe like $50. But right now, our current business structure is set up as a software as a service, right? So right now, if you just want to play around with with your account on Ayrro, and you just want to play with play money, some paper money, then we would charge you nothing. It's just basically a free trial account. Play around with the algorithms, and you can still auto shadow people, but you're using fake money. Now, once you become more comfortable with your strategies, then you can upgrade to our second subscription, which is the Trade Desk. And Trade Desk provides some more features to the app, but the primary one is that you get to trade with real money now. And then the last tier is our hedge fund tier. This is for those traders who are, again, really good and have really good profitable algorithms. then we invite you to this tier. And then on this tier, you can then publicize your algorithm on the leaderboard. And then people can pay to auto shadow you. And again, it's a revenue sharing model. So, they'll pay you, say, $10 a day to auto shadow your algorithm, and then 5 of that will go to the hedge fund that is providing the algorithm, and then 5 of that will go back to the company.
Okay. And yeah, so, and do you already have customers like who are actually using your platform and they're making millions already?
Yeah, not yet millions.
I'm just guessing.
Yeah. Yeah, I mean, that's the vision, right? I mean, our company goal and mission is to really help out people with their investing, right? To kind of automate their investing and create money for them. So we do have a couple hundred users on our platform, and a percentage of those are paying customers. We're still in the startup phase, I would say, right? So when I began Ayrro, it was just me. I was the sole founder and sole developer. And quite honestly, I didn't really go to school for computer science. So I had to self-teach, how to build a full stack application, how to gain access to the cloud and utilize all of its resources, how to build a front-end mobile application, right? So that took some time. And then just all the other things that are involved with the business, the marketing, the sales, the financing. It's a learning process for me. So again, the goal is to get millions of users who are all making millions of dollars. But obviously you can't get that on the first day.
Yeah. And let's talk through some of the, like you mentioned about, you are the sole developer, you are this, so, you had to learn, and, you had to then start it, get started. So can you maybe talk through some of the other challenges that you faced, maybe in terms of finding other team members perhaps now, and or maybe finding funds, to get started, or to, I don't know, maybe paying for integrations with other third parties. I don't know. It could be any other different kind of challenges. Can you maybe walk me through some of the other challenges?
Yeah, absolutely. So, so I mean, it's kind of a cliche, but it's true. I'm starting to realize that's true, that the biggest challenge when you're developing a startup is going to be yourself, right? It's going to be, can you get over your own, your own anxieties, say, with building a startup? Can I do this, right? Am I equipped to doing this? When you're at home, like I was, and I actually decided to quit my job to start this, right? So it's like, all right, you're at home, you're starting a new startup, you're all alone basically, right? And you're just putting in hours and hours and hours. I mean, that could be easily, and you could get burnt out within the first week of doing that. So the first challenge is like just making a decision and then sticking to it, no matter how you feel, right? Because you're always going to feel like, oh, geez, this really stinks, right? I'm putting in like, in something like 18 hours a day, and not really seeing any growth. I don't really know what I'm doing. And who knows if this is going to plan out, right? But you just need to, I like to tell myself, well, first off, if it doesn't pan out, no big deal, right? It's not the end. You can always try something else. But this is what life is for, right? It's for making new ideas, stretching yourself, see what you're capable of, really. And then once you make that decision that I'm just going to do it until I, physically can't anymore, then you just stick with that, right? You just stick with it. You made a decision. I wrote something on the wall. I said, I'm going to stick with this until, I physically can't anymore. And then every time you are feeling down or something like that, then you look up and you're like, all right, I made that decision. I'm going to commit to it. So that was number one. And then number two is networking, right? Okay. So, building a startup, I'm down here in Richmond. It's kind of a new city, right? So I'm like, okay, well, how, I don't really know anybody. I know the people at my previous employment, right? But I don't know anyone else. Like, and so networking was definitely a number two, like, hard thing. So there aren't, there are networking events around the city. You can go on Meetup, say, and just like, all right, I'm going to network with people, right? So I've actually found my first person on the board through, I was taking an online assessment for some Python, right? And which is the programming language. And I did really well. And then that word got around to me being someone else who was the CEO at a company. And I said, hey, I'm building this startup. And he's like, oh, that's great. Like, I love investing in startups. Why don't I help you out? So I showed him the product and he loved it. And then once you have that key player that knows the other key players, then that just opens the field for you, right? So I really leveraged him in finding other, members who could help with Ayrro and the operations of Ayrro, the development of Ayrro. And then again, once you find that one key player, they might introduce you to another key player, which expands your network even more. And then just goes on and on and on. So that was another, networking. It's kind of hard. It's kind of like, well, you just got to keep trying until you find that one person who knows a lot of other people and who's interested in your idea. And then you'll let that person be your cheerleader, and basically your open door for other people. And then finally, again, we mentioned like financing. So financing is always hard, no matter what company you're building, at any stage. If it's a startup or if you're like already well made it, you always want more money because you always know what to do with that money, right? You always, if I only had this much more money, then we could expand to this area or this area, right? But you just got to think, all right, well, what can I do with the money that I have right now? It's kind of like an engineering problem. And you just got to be really lean, and you got to be able at times to, again, if you don't have the money to hire somebody to do something, you got to be willing and able to learn that subject yourself. And again, you might not be an expert in it, but again, you just got to do with what you have. Mm-hmm. And you can't really beat yourself, in my opinion, you can't really beat yourself up if you don't do well in that certain subject because you're learning it, right? Mm-hmm. So you can't be like, oh, I wish I had more money. Well, you just have to realize, well, what's my resources at hand right now, and I'm just going to make that as efficient as I can. Mm-hmm. Now you always got to be asking people, you always got to be networking to see, all right, what partnerships can I get, or what investors can I get, and just pitch that idea like crazy, right? But at the time, at your current state, you have to just realize, all right, what is the most efficient allocation of my resources, and do I have to take on any more responsibility? What's the trade-off, or what's the pivot point? Will my skill set be able to efficiently get this work done? Now, it might be sloppy, but again, can I get it done, and can I deliver a product? So it's a scrappy life for sure, a startup life, but a lot of people, including me, really enjoy that type of life. It's kind of like, again, what are you capable of? What kind of problems, you're faced with problems every day. If you're a problem solver, then you'll absolutely love that kind of life, right? So
yeah, it is interesting, like the kind of challenges that you mentioned, and some of them perhaps are unique to your situation, and some of them are very generic to the nature, like getting the finances and so forth. But I'm still trying to understand, why did you choose fintech? I mean, on the financial sector, largely, I wanted to sort of, try and understand why this particular space.
Yeah, absolutely. Well, honestly, I was kind of like yourself not too long ago, where I really just didn't really know anything about stocks. Yeah. Didn't know anything about crypto. Crypto was brand new. I remember when I was in college, actually, it was starting to pick up a little bit. So I didn't know anything. I didn't invest any money. In high school and college, I didn't even have any money, but but I
didn't invest my millions that I had.
Yeah. Yeah. When I was in college, I started getting a lot more interest in economics, and actually my roommates at the time, they introduced me to stock trading. So I didn't know anything about stock trading. And then one one day, one of my roommates came home and said, I just sold for a profit of $30 and I used it on dinner tonight. And I'm like, wow, that's you mean you just like took money from somebody else and you used it for dinner? So it was like that concept was kind of fascinating to me. I'm like, I mean, you didn't really have to work for it at all. It just kind of, you invest, you let your money work for it, right? I'm like, wow, that's a completely different paradigm to what I'm exposed to, of like, all right, you put in man hours and you make money. Well, this is a completely different paradigm. It's like you put in money and not worry about it at all, just don't touch it at all, and then that money just can come back with more money. So I started, after I learned about that, I kind of just I started stock trading on my own manually in between classes, sometimes underneath my desk during the lectures. But when I graduated and I went on to my first job again, that kind of stopped. And that is because, you can't really, I was at a typical 9-to-5 job, and I really enjoyed stock trading. But my boss wasn't going to have any of it, right? Then it's like, all right, well, when you come here to work, you're working, right? No stock trading. So I'm like, all right, well, I was really enjoying trading stocks before when I was in college, but now I can't. So how can I still continue doing this? Well, that's a problem that's faced with almost everybody, is how can I trade stocks when I'm busy during the day? Because almost everyone has like a typical 9-to-5, and at least like in America, New York Stock Exchange is open from, say, like 9 to 4, right? So that's exactly the same times that people are working. So most people just, all right, I'm going to set a long-term strategy, right? I'm just going to put my money in and forget about it, right? And that's what most people do, which is it. Yeah. Yeah. And that's a completely fine strategy. But I started reading more and more, and I learned about certain quant funds, certain quant companies and hedge funds, right? So you have like, maybe you've heard of Renaissance Technologies, and Renaissance, it's kind of like an exception because they're doing incredibly well. But there's a lot of companies that are similar to Renaissance in that they don't trade based on emotions. They trade based on mathematical models, right? And I started reading other books like Flash Boys, which they started talking about high frequency traders. And I started realizing more and more that if you are a stock trader, just a retail trader who, say, uses Robinhood, then you have a severe disadvantage to all of these hedge funds, right, on Wall Street, because they're using millions of lines of code to evaluate hundreds of thousands of data points, and then coming up with an optimal solution. Most of them are based on AI, and just technology can calculate these a lot quicker, these buy and sell signals a lot faster than a human mind can. So really, these quant funds and hedge funds were like bullying these smaller retail traders. And I'm like, if you're trying to day trade, you have a severe disadvantage to a lot of these hedge funds. So really, just the potential for growth amongst automated algorithmic trading systems is very high, right? A lot of these hedge funds are very secretive about what they do, because they realize that what they're doing is very profitable, right? So that got me really interested in automatic trading and algorithmic trading. So I actually started to learn to code. How can I do this myself, right? How can I use my own laptop, say, to create my own automatic algorithmic trader? And so I learned Python. I started making different models. And eventually I came up with a solution that worked. So what I would do is I would come home from work, I would code up an algorithm. And then right before I went to work, then the very next day, I would hit the play button. And at this time, again, I'm very new to programming, so I don't know about the cloud. So I would hit the play button on my laptop, and then I would just leave my laptop open and running and plugged into the wall so it doesn't run out of battery. And then I would leave for work. And basically my laptop was just running at home, acting as a server, but open and running. So if anyone were to, say, enter into my home, like, they could see that my laptop was just on and open. And then that would run for me throughout the day, trading stocks based on the algorithm that I created. And then I would come home and then just check my results. And to me, this was like phenomenal. I could have, algorithms running separately on my behalf while I did something else, right? And those algorithms could perform better than just like, say, long-term holding, right? So to me, that was phenomenal. So, I got really excited. I just talked to other people about this, and that got them excited as well. And then eventually just the idea of building a business around this started taking form, and I got really excited about that. So I incorporated it.
And what was your validation? Like, I'm sure there's some kind of validations you used in terms of saying, okay, yesterday I was at $100, today I'm like at $1,000. Like, is that the kind of validation you are looking at, or you are saying, hey, I'm 20% up from yesterday to today, and that is a good number? So what is that you are looking at in terms of saying, okay, this is working well?
Yeah, well, the typical I guess pivot point, or the baseline is if your algorithm is performing better than, say, the S&P or the Dow, then you have a algorithm that you should prefer, right? Because if you were to just invest in, say, the Dow, which is a average basket, right, of all of the biggest companies, then you could long-term trade that, and then you would get something like 7% a year. Now, if you could do better than that, then most times it's just referred as like that you've created an algorithm that can beat the market, right? So it does take some time, right? You can't just say, oh, all right, well, if I have an algorithm that produced $10,000 today, and if I would have invested that money in the Dow, I only would have made like 100. Well, you can't just make your conclusion based off of one data point, right? You need a sufficiently long enough series of days where the it's statistically significant that your algorithm is beating the market. Now, again, there's this topic called black swans, right? Which is always like, okay, once black swans come up, then it's kind of like, all right, we're in a wholly different discussion now. And the idea of black swans is like, okay, well, you may have an algorithm that is statistically significant in earning you, 1% a day, say, or like, 0.25% more than the Dow a day on average, right? But the idea of a black swan event is that there might be some catastrophe that was completely unexpected, right? And it has a huge impact on the market, and it might kind of like destroy your own algorithm. In which case, if it does, then that kind of sets you back at level playing field with the Dow. But yeah, I mean, those things are mostly unpredictable, right? So the best that you can do is, all right, we're just going to make a statistically significant algorithm. And then if that is more profitable than just doing a long-term investment strategy, say in the Dow, then I would recommend that you use it.
And you mentioned like there are a couple of hundred users like who are actively using your application now. And what are you seeing in terms of data now? Like how much let's say people have profited, in simple terms, like in terms of using your application versus they were doing everything on their own. What has been the difference?
Yeah, so one thing that we're seeing really big of is when we first started, we only allowed you to trade stocks and ETFs. So people enjoyed that, and they could say they could make money 9 to 5, right? If when they were trading on the New York Stock Exchange. Earlier this year, we actually introduced cryptocurrencies. So now traders can trade cryptocurrencies, and as you know, the cryptocurrency trading, or the cryptocurrency exchanges are open 24/7. So now, like, users can not only trade while they're at work, but they can also trade while they're sleeping, right? And this has actually been a huge, very, very popular feature. And I'd say 50% of our users are incorporating cryptocurrencies within their own portfolio. Now you could say, okay, well, how is that performing? Like, is that, are they doing better with cryptocurrencies or worse? And we're actually finding that a lot of our users who incorporate cryptocurrencies within their own portfolio, their trading strategy, are actually doing a lot better, right? So in the top 10 right now of our leaderboard, 9 of those incorporated cryptocurrencies into their portfolio. So that's kind of like the what we're seeing so far with our users trading stocks. Are they making money, or are users trading cryptocurrencies and they're making money? And we started to realize that cryptocurrency is a very popular asset.
And is it too risky to go all in for crypto instead of just going for the stock and so forth? Like, do you think it's too risky?
Yeah, I mean, it's possibly more risky, right? I mean, cryptocurrencies are known to be a lot more volatile than some stocks. I mean, there are some ETFs that are very volatile as well, right? Like, and even some stocks, right? I mean, we had Tesla earlier this year that was just on a crazy volatile swing, and that was just that's just a normal stock, right? And then of course we had the meme stocks, right? We had GameStop, right, and AMC that were just gaining enormous amounts or dropping enormous amounts, and not traditional at all. So financial history is definitely being rewritten in terms of like, how do these stocks behave? How do their price patterns move? But yeah, I mean, traditionally, cryptocurrencies are regarded as a lot more volatile than stocks. Now, this could be reviewed as a good thing or a bad thing, right? A lot of times when you're day trading, volatility is actually a good thing. So if you were to say, if you set up an algorithm that says basically anytime a cryptocurrency drops, say like 3 or 4%, well, that means that if we have reversion to the mean, then that's like a 3 or 4% a profit. That's a 3 or 4% opportunity for profit, right? If it jumps back up. So a lot of times when you're choosing strategies, you actually want, or choosing, say, asset classes, you actually want more volatile asset classes that you can trade, because if one were, say, flat, well, then you can't really make any money if it's just flat, or if it's just like very, very slowly growing. But those stocks or cryptocurrencies that fluctuate, kind of like a sine wave, well, you could set up a strategy that says, all right, when it drops, buy it, and then it'll go back up again, and then you can sell it. So there is, I guess, you have to tweak your algorithm basically. And actually on Ayrro, we provide a back testing service as well. And with back testing, you can run a certain algorithm on a specified amount of data, and you can set those date endpoints. So you can say, all right, well, run my algorithm on all of the data, all the price data from last year, and see how well that would have performed last year. And if you realize that, okay, well, I'm losing a lot of money, let me investigate, why am I losing money? Oh, well, maybe it's because I set too low of I set too strict of a stop loss, say. Then you can actually go and adjust that and then back test it again. So it's all, it's different risk preferences, right? Obviously, cryptocurrency is a lot more volatile, or at least traditionally it's a lot more volatile than some stocks or ETFs. But a lot of people say, well, that's actually an opportunity to make money.
I think on, if you look at the surface, it might look like it's very volatile, but if you look at the overall evolution, then maybe you would think like, okay, actually it's not that volatile, right? So think about it from, let's say, I'm just looking at Ethereum, let's say a couple of years, 1 year back, and maybe it was around, I don't know, 300 or something, right? So now it's above 2000 all the time, which means like it has grown highly, right? And even though, yes, compare in reference to where it was recently, it may sound like it is volatile, but actually it's not that volatile. If you compare that to the whole 1 year of history, then maybe it's not that volatile, right?
Yeah, that's a very good point. You have to set your time frame, right?
Yeah.
So you could say, well, okay, I'm going to set a 1 year time frame. I'm gonna see how much did Ethereum change within 1 year. So January 1st, it was at this price, let's say like 3,000. And then January 1st of the next year, it could be 3,000, right? So, so if you take a 1 year time frame, then it's not volatile at all, right? It's very flat. So long-term strategy would be unwise, right? But let's say, okay, let's just reduce that time frame by half. How much did it change? And let's reduce it by half and a half and a half. And eventually, if you look, say, within a day, you'd be like, all right, how much did this change within a day? Right. And you could say, all right, well, if it changed a lot within a day, I'm going to take on a daily trading strategy. I'm going to buy at the start and then sell at the end. Now, even for some stocks or cryptocurrencies, that might not be enough. You might have to take, say, like a minute. And this is where the power of, say, algorithms and automation really take place, is because humans alone, they can't process all the price changes that happen within a couple seconds, right? It's just way too much data. But a computer that's running an algorithm definitely can process that, right? You can execute multiple trades, hundreds of trades, even within the course of a second, something that would be impossible for a human alone to do. So you'll find out that even like some of these cryptocurrencies, maybe over the long term, they may not be that volatile. But if you were to look, all right, what happens today? Well, you can see that maybe, it rose 1%, it dropped 1%, and then say like it rose another 0.5%. Well, if it rose 1% initially, that's like a 1% opportunity, right? And if it rose again at the end, another 0.5%, then that could be like a 1.5% opportunity that you could make money on, which wouldn't be captured in a longer term frame, right? But again, that shorter time frame, you could actually capture those profits.
I see the point. Like, if you're doing it on a daily basis or every minute, and then that might make sense, because I see that significant drop from yesterday to today, or even within today, you'll see a lot of variation in terms of price. Like you said, you could actually follow to someone who is doing this for a living, or who is a professional trader, and then just following that person or just following his algorithm, and then applying that same algorithm to your own trading algorithm, then it might be one of the ways how you can use your platform, right?
Yeah, absolutely. And we actually have a lot of people who are doing that, actually. Now we're trying to change the environment, or the entire, I guess, not so much the brand of Ayrro, but we want to convert it more into like a game, right? So that's why we introduced the leaderboard, right? To kind of have like this friendly competition between the users. But we really want to encourage users to actually learn about stock trading, right? We even have our own separate Ayrro classroom, where we teach users about some of the certain indicators and technical terms, and like what even is the stock market, what does it mean to buy stock and sell stock. But we incorporated back testing, say, so users can play around with creating their own algorithm, right? They can set different metrics, set different parameters, try out a back test, see if that works, and then launch their own. And then once they do launch their own, again, they are put on the leaderboard, and they can rank amongst some of their friends or some of the other people on Ayrro. And we're finding a lot that the users actually really enjoy this aspect of it. Like the first screen that they go on when they open the app is, how am I comparing against others on the leaderboard? And so we're trying to gamify the app, really, and that will encourage more and more users to create their own, and in the process learn about financial education.
You mentioned about cryptocurrencies, and it is something that even I'm following closer now in terms of getting my own knowledge, more knowledge, I would say. It's not that, it's very new to me. It's just that, I'm still trying to learn the ins and out, right? So I'm talking to a lot of entrepreneurs and leaders on this space and trying to improve on what I already know. So I'm just trying to know your perspective on what do you think about the cryptocurrency world itself?
Yeah. Well, it can be very complicated, right? So if you were to actually delve down into the technology, like you'll if you were to Google search like how do cryptocurrencies work, one of the first terms that you'll probably encounter is, well, they use the concept of blockchain, right? The technology of blockchain. Blockchain is very interesting technology. I'm not going to go into it right now, but literally the nice thing about cryptocurrencies is that, again, if you want to trade them, you don't need to know anything about that, right? You don't need to know about anything of the technology. You really just need to know, all right, how much is the exchange rate for me, again, US dollar to say Bitcoin, and then you literally just trade a single Bitcoin, which is a virtual currency, for your physical money, in the hopes that the exchange rate will go up, and then you can resell your Bitcoin for even more US dollars. Now in terms of like virtual currencies and cryptocurrencies as a whole, right? Do I see a future for them? Well, I think they already have, they've already, I guess, made their position, or they've already made their acceptance within currencies, right? So I do believe that cryptocurrencies are here to stay. I do believe that we're going to start using cryptocurrencies to purchase things. We already have, right? We already have. You can use cryptocurrencies to purchase certain goods and services, right? Now, do I think that cryptocurrencies will ever replace some of these fiat monies, these fiat currencies, like the US dollar? Now, well, no, I don't. I actually don't believe that. I just think that the US government they don't understand it enough to bring it in. It's very unregulated. They want something that they know and that they want to control. So my opinion of it is that it will be just another currency that you can buy and sell with. But will it ever replace, say, a centralized monetary system? Well, no, I don't think so.
Mm-hmm. What if we create our own cryptocurrency, which is, can be relatively stable, and then call that as a stable currency, like instead of USD, I don't know, it would be PD, currency promo Dakar. I don't know. It would be one of those currency, right? So how can we create that stable currency, which is going to be a cryptocurrency, but it could be used as a stable currency of exchange? So is that something that you see in the nearest future?
Yeah, I do think that is a possibility, right? I mean, as you know, cryptocurrencies are super volatile right now. That's one of the big like defenses of why we shouldn't have cryptocurrency regulating our economy or using these, because if you could buy a cup of coffee for, say, this amount of Bitcoin, but then Bitcoin goes way up or something like that. Now you have to buy a cup of coffee for a totally different price. So it's the instability of it. It's not really a good source of value. I mean, there are countries already. Maybe you heard of El Salvador, that are now accepting cryptocurrencies. I think they did Bitcoin as legal tender, right? And again, Bitcoin is kind of it's not very stable, right? But there are, again, this is just kind of like a next step into the progression of cryptocurrencies evolution. So I do think that, I mean, cryptocurrencies, they have a lot of advantages in terms of an actual currency. So that would incentivize governments, say, or companies, or just scientists in general, to think of the problem. Okay, well, with all these advantages, how could we use these? Well, what are the disadvantages, and how could we eliminate those or change those, right? So yeah, I actually do think that they could make a stable currency which they could use as just another currency that they use. But again, I don't think that it will ever replace the US dollar, at least in the near term future. What I mean by that is like, within 10, 20 years, I think, a lot of people, they just understand the US dollar a lot more. So the US dollar, and fiat currencies at large will be around for another 10, 20 years.
Mm-hmm. And let's dive into another topic, like concerning your app itself. I want to sort of drag you into that. What are some of the, let's say, USP for your app versus, let's say, some of the flaws that you can maybe indicate a little bit, say, hey, we want to improve on that aspect still?
Yeah. So the app as we have right now is it's basically this is how it works. So we don't actually, when you want to trade through our app, we are not a broker, right? So you don't actually put money within our app and we trade that money. What we do is we actually connect via APIs to other brokerages. So we provide the whole automation and algorithms, right? But we don't actually do the stock trading or cryptocurrency trading on the exchange itself. We just basically send requests to the broker to execute your trade. So you'll fund your brokerage account with the funds, and then you'll supply Ayrro with the algorithm, and then Ayrro will promise to run that algorithm, automatically for you 24/7 and make those trades based on whether the algorithm says buy or sell on your brokerage. So right now we are partnered with Robinhood, and that's actually our only broker right now. So if you want to trade with real money on Ayrro, then you will have to sign up for a Robinhood brokerage account. Now that was kind of like our pilot group, right? And the reason why I chose Robinhood is because Robinhood has been getting a lot more attention in the news. I mean, some of it's bad, right? That's not good, but if you look at their user count and numbers, you'll actually see that they went from, say, 1 million 2 years ago, and then they were at 8 million 1 year ago, and then now within the course of a year, like they've increased 151%, and now they're at like 18 million when they went IPO. So more and more users are using Robinhood as their brokerage account, and which is good. Like that's why we chose them as the pilot. But we do understand that there are a lot of other investors who use different brokerages, such as TD Ameritrade or E-Trade. So that's some of the areas that we're looking to expand into, is adding additional brokerages to Ayrro.
Yeah. How about Binance, right? So you don't think about Binance at all?
No, Binance as well. Yeah. So some of these,
I heard they're quite big.
Yeah, yeah, absolutely. They're huge. Yeah. So again,
not that I have an
really
account
nice
there. It's just that I'm saying.
Yeah. No. I definitely Binance. Binance is one of the biggest cryptocurrency exchanges, so we want to integrate them as well. Again, Robinhood was nice because they allowed, like when they came out with their cryptocurrency platform, then you could trade both stocks and cryptocurrencies on Robinhood, all with basically one brokerage account. But yeah, I mean, the not so good thing, I suppose, about Robinhood's cryptocurrencies is that they only allow 7 different coins. Right? It's like Bitcoin, Litecoin, Ethereum, and a couple more. But obviously, there are like thousands of cryptocurrencies now, and that's why we want to integrate now, say Binance or Coinbase within our app. Yeah. So that you could actually trade those currencies.
Yeah. Interesting what you're doing. And what are other challenges that you would like to maybe solve in the next quarter or so?
Yeah, well, we are, we basically want to make we want to make a product that people enjoy using, right? So how can you gauge that? Well, you gauge that through user feedback. So in order to get user feedback, you need users, right? But in order to get users, you need you need to make a product that's like really good. So it's kind of like a circular loop, right? So you really just need users to try it out first. That's how you break the loop. Okay, so if you get users to try it out, then you ask them for their feedback, and then when you get their feedback, you can then integrate that into a better app, which then you can introduce more users to try, right? So that's one of our biggest challenges, is just like getting more users to try it so that we can get even more feedback from it. And there are some like more technical challenges that we have to solve, right? So one of them is that, all right, if we are running these algorithms on the cloud, then that uses, cloud resources. Like if they're running 24/7, then, we basically are renting out servers from the cloud to run like 24/7 and sending out API requests, and getting price data in. So we basically, how can we optimize that as well? And we're currently in the midst of that. But again, we only have one developer right now, and that's me. And I'm almost kind of like learning as I go. So,
Okay.
But yeah, and then again, the another challenge is just like, all right, well, will this retail investing craze die out, right? Obviously, when the coronavirus pandemic hit, that brought on tons and tons of retail traders. I mean, the entire retail trading journey has been one big evolution. Like first you started with commission-free brokerages, and that got people excited. Then you added like the ability to trade fractional shares, and that got even more people involved because they don't have the money to say invest in Berkshire Hathaway or big Amazon stock, which costs like thousands of dollars, and so that brought even more people in. And then when the coronavirus pandemic hit, that brought a lot of people home and looking for like another source of income and just like looking for some way to just like deflect the boredom of being at home and stay at home orders and stuff like that. So that brought them onto retail trading, and now that say like the pandemic, we're starting to get a little better hold on the pandemic. We're rolling out vaccines. So now more companies are allowing their employees to go back to the office. Well, then now that they have something else to do, we'll see if the whole, stock trading is as popular going forward. Now, again, we're trying to ameliorate that. We're trying to say, well, you may not be able to stock trade back at your office, but now look, here's Ayrro, which allows you to basically create your algorithms that you were trading with before when you're at home, and now we will run those automatically for you, so you don't have to worry about not being able to trade when you're at your office. We have the algorithms that will run automatically for you.
And how often do you run into the situation when it's like, okay, you are trading on behalf of a certain user, and then you realize like the user has lost a lot of money, and then it's because your algorithm somehow sucks and it didn't do the job it was supposed to do. How often do you run into that situation?
Yeah, so that's so according to FINRA, which like FINRA and SEC, which like regulates a lot of the buying and selling of stocks and other like asset classes. So they actually prohibit, if you want to trade for somebody else, you need regulations and you need licenses and brokerage licenses, right? So if you were like, all right, David, you seem to be a pretty good stock trader. Here's my money, just like trade it however you want to, and then return to me the profits and like the original principal in like a month. That would actually be an illegal thing to do, because I don't have a brokerage license. I'm not allowed to trade on behalf of other users. Now, we actually get around this with Ayrro. We actually get around this rule because we don't actually hold the money that, so we don't actually, when users sign up and make it an account, they don't fund us, they fund their own brokerage account. And then number two, we're not providing them any of the algorithms, they create their own. Mm-hmm. And yes, we have our auto shadowing feature, but again, all of the all of the money is being held in their own brokerage account, which means all the trades are being executed by them. We just provide the automation aspect to it. Does that make sense?
Yeah, indeed. But still, when I am using your platform, I'm thinking, okay, I was supposed to run that trigger, or there might be trigger where I want to sort of pull back, or there might be trigger when I want to, I don't know, buy. I'm more indicative towards those aspects, like when the trigger doesn't function, then it's your fault, right? So that's what happens, right? So it's like, okay, I want to pull back, but it didn't pull back, right? So then I lost a lot of money. So that's what I meant.
Yeah, I mean that's kind of just like a bug in your code type of thing. So if that happens, yes, we do take full responsibility for that.
Yeah.
So the good thing is that we're a small enough company, and we've done thorough testing that hasn't happened yet. But yeah, if that were to happen, right, then that would be our fault, because you said basically, our company Ayrro provides the automation, and you supplied us with an algorithm to automate. So if we're saying that yes, we will automate that, then and we don't, then we're not supplying basically the services that we say that we are. Yeah. So now we do have a lot of like terms in our user agreements and stuff like that saying like, hey, we're not like, none of the traders on our platform are professionals. We're all just like, we're not registered financial advisors. So a lot of those things like help, and like if something bad were to happen, then we could just point back to the user agreement, say like, hey, but yeah, but I mean that is, I mean, it's a technical problem, right? If that ever does happen, say like the servers go out and then stock market drops and it doesn't catch your stop loss or whatever, your max drawdown, then that could be definitely a problem. But it hasn't happened yet. We're still at a manageable amount of users, and we've done plenty testing and debugging that something like that won't happen.
Indeed. I'm just thinking about the extreme. Sometimes I have to think about like the situation where you're creating your application for, I don't know, let's say 200 users to 2 million users. Perhaps there is a better way to manage 2 million users versus 200, right? So in terms of complexity of managing 2 million, maybe you need a better system to manage, I don't know, 2 million users. Like it could be different APIs. I don't know. It could be different service capacity that you need to increase because you can receive a lot of requests at times, and the requests can be handled. So I'm just thinking in this perspective. Yeah, maybe absolutely. Your requests are on the queue now. I don't know.
Yeah, I mean, obviously, there are a lot of actually research. Like, there's a lot of companies out there that have, right, like 200 million users, say.
Yeah.
So, or maybe not a lot, but there are companies out there that have a lot of users, over 1 million users. So a lot of these cloud providers, such as like AWS, GCP, Azure, they have a lot of services that lets you handle that volume of requests, right? So it's all like an system architecture problem. And we try to think of these things before we have that amount of users. We try to again make, say, like a data pipeline, say, or a queue, like a publisher subscriber model. So yeah, that's kind of like, again, like a system architecture. And I've done my homework, and I know how to build these things out. But again, if we're at the stage of like, say, 50 million users, then we'll definitely have a bigger development team as well, that we'll be able to cover a lot more of those edge cases.
Yeah. Of course. Like as soon as you have I don't know, more than X amount of users, then obviously you definitely want to scale up, not just yourself. You would be burned down. So
yeah, I mean, they kind of grow it. Like, again, the reason why we're able to do what we do is like, okay, well, if we only have say 400 users, then my expertise and ability there, we can build out the system architecture for that, right? But if we have, say, like 4,000 users, well, maybe we can hire another developer to make an even more stable, say, system architecture, right? And it kind of grows together.
Interesting, man. Like you're doing a lot of interesting things, especially in this space. And this space is new, yet, especially the crypto market, like it's already $2 trillion market. Even though it's new and a lot of people still are not aware of how the entire ecosystem of cryptocurrency works. And I recently had a chance to talk to one of the let's say expert in this space, and she explained about NFTs and these are new concept for a lot of people, right? So how do you see the evolution of the space, let's say 5 years from now? Like what are some of the changes that you can anticipate based on you being on this space?
Yeah. So again, we kind of discussed that a little bit before. I do think that cryptocurrencies will continue to grow, and they will continue to get more regulated, and will be a part of the daily lives of all of us, right? Now, I think that basically this is going to we're going to have to make it like a norm, right? So enough people are going to have to be talking about it to make it kind of just like a norm, because right now nobody really knows what an NFT is, or like, maybe they've heard of those three letters before, but they don't actually know what that is. Or maybe they've heard of blockchain before, but they don't know what that is, right? So it's just kind of like a gradual, all right, well, if enough people start talking about it, then there's a percentage of that group that will actually research, well, what does that actually mean? And then every time they go to like a cocktail party, say, or go to the local bar, then they'll just bring up the fact that, blockchain does this or does that, or anytime there's a question, then they'll kind of, it's kind of just like word of mouth. But yeah, I do think, again, blockchain technologies, cryptocurrencies, NFTs, they will continue to grow. It'll become more of a norm. I don't think it's ever going to replace, again, say, with cryptocurrencies, say our fiat dollar in the near future, but it will become a part of our daily lives.
Right, David. Thank you, man. Thank you for joining this wonderful session. I want to congratulate you on your startup. Keep doing the interesting things that you can do. You are a single man developer right now, and hopefully in the next quarter or so, you'll add for a few more talented individual in your arsenal, so that you can scale up faster. You can add Binance as well, and onboard PD as well, onboard me. Yeah, it's an interesting journey that you are having. Of course, it's not going to be straightforward for you, but still, it's an interesting journey. And let's see in the next quarter or so where you are, and I would like to sync back with you next year and see where you are, and trying to learn from you.
Absolutely. Well, we anticipate it to grow, and and then by next year, maybe I'll invite you to some castle or whatever that or the headquarters that we have.
Absolutely.
So.
When you have created that magic algorithm that works, like it would instantly make me millionaire. I will put my property into that, and hopefully that's a success, man. Like I'm counting on you.
All right. Well, I appreciate the time.
Okay, you take care, man.